Welcome back to Switzer on Sky News Money. I'm joined by the King of Chance, Lance Lai from Accountancy Invest. With the pound hitting new lows overnight against the dollar, I really wanted to find out what he had to say about it. Lance, welcome to the program.
Thank you, Paul.
Now, every month I gather, or every time you come on this program, we always look back at what you did on the last program.
Right.
And I think you're here on the 27th of April.
That's right.
And you were talking at the time about the US S&P 500.
That's right.
And the summary take I had was that you're expecting that to be sort of fairly relatively range-bound.
Correct.
So let's just look at the chart you gave us on the 27th of April and explain what's happened since. And,
sure, Paul. So when it comes up...
So we'll bring up that chart. And
there you go. So this was the chart basically on the 27th of April. And at that time, it was 2081. What had happened, it had fallen outside of the channel to S2. And at the time, I said that it was going to be range-bound within a 16% range between R at the top and S2 on the bottom. And when the next chart comes up, Paul...
OK, so let's go on to the next chart, which is the S&P 500 today. So we'll take it forward from the 27th of April through to the close last night, Lance.
Yeah, so look, there's the chart that's basically up to date till the close of last night. And incidentally, really, it's only gone up another 3 points. It's 2088. What's really interesting is the last 3 times that I've come on the show, Paul, it's actually gone up the sum total of 3 points. Yeah. Over the 8 months.
So given this is the lead market, right? I mean, every stock market in the world follows the S&P 500, right? I mean, it seems stuck. It can't get through this 2,100 level. What's your call now? Are we going to go at it, or is this still range bound?
It's still range bound, and what's really interesting, Paul, is that when we do get to the Aussie market, it's quite funny. When I was preparing these charts for the show tonight, I virtually just had to change one number at the top.
Oh, Lance, you haven't done enough homework if you're doing that, right?
And everything else has been the same, except Brexit.
Except Brexit.
Except Brexit. So in terms of the US chart, if they do bring that up one more time, what we'll see is that we're going to be range...
We're up the S&P 500, that's correct, yeah?
It'll be range-bound. You can see there, it'll be range-bound once again. I think that what will happen is, you know, by the time the next time I come on the show, which will be either a month or 2 away, hopefully it'll be between R and S2. R is 2149 and S2 is 1810. And those levels I would expect to hold for the immediate short term, which is really the time frame that I work with.
I don't want to say I hope you're wrong, Lance, because I want this market to go up, but we'll just...
I think it'll be OK, Paul.
OK. So let's move on, first of all, to the pound, because
sure.
I promised this in the intro, and
yes.
It's hitting all-time fresh lows. So should it be our view, particularly travellers heading off to the UK? What's the outlook for the pound?
Well, I think we should... travellers to the UK should take their time, be patient.
Don't rush in and buy your pounds yet.
Don't rush, because I think we've got better levels to buy.
OK, let's look at your chart and explain the chart if you bring up the pound sterling chart.
Right.
So this is the pound against the US dollar?
Yes, correct. So, Paul, currently it's sitting at 1.2916 to the US dollar. Mm-hmm. And what you can see there at the beginning of the chart is that on the 15th of July 2014, it was at 1719. What happened was in the 19 months...
That's a big movement down, isn't it?
That's a big movement down.
That's sort of 40% almost, roughly.
Well, so, Paul, what happened was in the lead up to Brexit, in the 19 months in the lead up to the vote, it actually fell 19.5% already in preparation. That was people taking money off the table just in case.
Yep.
And then what happened was in the 3 months from June till the vote, in March till the vote, it actually went up a little bit and stabilised. It stabilised and went back up about 6%. Interestingly enough, Paul, on the day of the vote, I was in Madrid. And
Lance, you have all the fun. I mean, like being in Madrid in June, I mean, there's got to be some upsides to your job, aren't there?
It was beautiful. Apart from the Brexit
Apart
thing.
from Brexit, yep. And you felt a bit poorer afterwards, did you?
Well, no. Actually, I was just on holidays, so it was all right. But Paul, what happened was, in the 10 hours before Brexit, it actually broke $1.50, and it looked.
Went up before they started to count the vote, yep.
And it looked as though the Remain vote had won. And of course this was a shock to the market because it actually broke through a level which I thought indicated the Remain vote had won. It did an immediate downturn, and you can see on the far right of the chart we're currently sitting at 1.2916. What actually happened, Paul, was that on the first day, as the vote came in and as it was known that this was all over, that they were leaving, or the vote to leave, it fell 13% more that day. And then what happened was the next day it fell another percent. And so what happened was in between that point and now it stabilised a little bit, but last night it hit fresh lows.
OK, so we've got two more charts to get
Sure.
through. What's the bottom line on
So
just bring it up once more, the bottom line.
The bottom line is we've got more to go.
You've got more to go.
If you look on the chart there, I've got 1259.
You can just see that's right, the sterling
I've got
chart.
1259, which is 2.5% lower from here. 1.2128, another 6.5, and guess what? I've even got an outlook for 1.18.
Oh dear. So if you're travelling to the UK in the next week or so, don't rush out and buy the pounds, is what Lance is saying. OK, let's move on to the Aussie dollar.
So the rest of the charts are relatively easy, Paul.
OK.
As I said, I just changed a few numbers and it was
OK, so if we bring up the Aussie dollar chart now.
So the Aussie dollar, last time I said we had a sideways action with an upward bias. Yep. That's basically what we've had. We've had basically a
it just doesn't want to go through 70 cents, does it?
No, but you know what? I think what I've got there is R and S1 S2 as a range. R is 78.65 and S2 is 70.8. We're currently sitting at 74.5. It's gone pretty much nowhere from the time I came on, which is A in April, to where we are now. It's gone down, hit the 200-day moving average, bounced back up. And where we're at now is, I think we're going to gently keep going up and sideways bias with gently going up.
So some of the bearish calls out there, 40 cents. I mean, that just sort of fairyland stuff, in your opinion?
I can't see that, Paul.
You can't see that?
No, it's certainly not showing up in the technicals.
Well, putting the technicals to one side, I'm a fundamentalist and I reckon 70 cents is about fair value. So I'd like to see it have a go at it, but it doesn't seem to want to. So it's been remarkably resilient. And I think that's borne out by what you're saying from a technical point of view.
We'll probably just go sideways, Paul, with a slight upward bias, which is what I said last time, and I'm going to say that again.
OK, we're going to note that one down, Lance, as we do.
Yes.
Mark you next time you come on board. OK, back with Peter, but let's talk about the S&P ASX 200, if we could bring up that chart.
Well, this chart, when it comes up, also is somewhat unremarkable.
OK, so it's up on the screen now.
Look, it's also somewhat unremarkable, as I said. You know, there was 10 points difference between the 8 weeks that I was on from now till last time. Currently, we sit at 5197. Last time I came on was 5187.
So 10 points difference over, 2 months, roughly? 2.5 months, yeah?
Right.
Yeah.
And so I only just had to change that one number, and actually the T1 and the T2 levels that I have, which is 2% higher and 5% higher, I didn't even have to change the headings there, Paul, because I still think it's going to do that.
Look, in Switzer, we try to make the work of all our guests as easy as we can, Lance.
Right.
So, bottom line here, though, you're still reasonably positive on the local share market. Is that correct?
Yeah, so you can see there can you see how the 200-day moving average has bottomed out?
That's the yellow line?
That's the yellow line. It's bottomed out. It's slightly turning up, right? And what we've had between the time that I came on last till now is that we've had a retesting of that. We've bounced off that yellow line, we've come back up, and we're sort of sitting there waiting again. And unfortunately, I think what we've got is, until this Brexit sort of like plays itself out in the months to come, I think most of the indices are going to be treading sideways, and if not, probably slight beneficiaries of there's Brexit uncertainty.
Yeah.
And which is my reason for that slightly upward bias, Paul.
OK, so I'm going to write down mildly positive on the Aussie.
Yes.
Bearish on the pound.
Yes.
Mildly positive on the ASX 200, a little more up twist, but neutral to sideways on the S&P 500.
On the US, correct.
OK, we'll see whether you're right, or Peter will see whether you're right. Lance Lai, the Director of Accountancy Invest, thank you very much for joining us on Switzer.
Thanks, Paul. Great to see you.
Well, that's the show, and if you want to read Peter's thoughts each morning at the close of Wall Street, you can get it at switzer.com.au. Hopefully, Peter will be well enough and be back on the program tomorrow night. I'm Paul Rickard. Thanks for joining us.